go to Leo Tilman here. I mean, absolutely remarkable. Frame is a pro, formerly with Bear Stearns. Insider trading, we think of Martha Stewart. This is very much different than these other insiders trading things we've seen.
Absolutely, and it sort of shows you to which length people will go to deliver performance in a market where delivering true alpha is exceptionally tough, and it will remain tough.
He has to deliver return. He's a hedge fund. He has the pressure there. Who monitors the hedge funds so that we don't see further insider trading in the future?
Well, the SEC and the regulators, but it's really difficult to do unless the environment does not encourage sort of ethical behavior and there's full understanding of the penalties that you would incur for insider trading.
Let's go to this chart, dreaded first chart. We're thrilled to have Leo with us today off of his wonderful book of a few years ago, Financial Darwinism. There's UBS, and they're ugly like all the banks, and they go off a cliff there. I'm honored to ask you this question. What was your response when you heard, once again, somebody wasn't supervised?
You know, it's amazing to incur this kind of a loss at this day and age, because after all of the recent years and all of the advances in controls and governance and operational risk, it's fairly astonishing to see this type of lapse of controls and judgment. It's one thing to be exposed to a bank run or some kind of economic downturn, but not to supervise a trader and lose this much money at this day and age shows pervasive lack of sophistication and controls.
You consult on risk to executives. What is your message to them so London idiocy doesn't happen again?
Well, look, we know what needs to be done in the space of operational risk and fraud, and I think it's just a matter of instilling the right culture, the right controls, the right technology. Again, it's fairly well understood, so it's quite puzzling of what happened at UBS. I think the challenge is greater. The challenge, based on earnings releases that we're seeing today, the pressure is going to intensify. How are these organizations going to respond?
Okay, Chartapalooza, too much information to start it up here. I want to look at these curves. This is the sovereign curve back when peace reigned. In 2006, that's the yellow line, and you can see the yield curve come down. This is the financial repression now. Now bring up our next study, which looks remarkably the same, which is just a triple B industrial. And we're going to bring up here, yeah, chart 4, there it is. It's a triple B industrial, and there's before the crisis, and we've come down. Leo Tilman, there's financial repression across all credits, lower yields. How can we sustain that? That seems like the ultimate free lunch.
Well, it's really not, because on the one hand, it forces people to leverage up and to take on more risk, because delivering the former levels of returns in this environment is virtually impossible, right? So if environment is as such, you'll be forced to take on more and more and more risk.
Right.
So, and given the potential inflationary pressures, financial dislocations, and everything else, it's most certainly not a free lunch. As a matter of fact, it's probably one of the most difficult environments we have seen in decades.
Do you blame the Fed, as we heard the candidates blame the Fed at the Bloomberg debate?
No, I don't think so. You can debate whether the policy is too loose or not, but the fact of the matter is that the economic recovery has stalled. We're in a perpetually low growth, low return environment, and unless inflation shows up, all of these rates are justified. The problem is, how do you remain competitive in this environment?
Right. Well, let's look at this chart. This is the Tilman thermometer here, thanks to Michael Rosenberg and his team at Bloomberg LP, the Bloomberg Financial Conditions Index. And this is the key question for Mr. Tilman. There's 11 or so ratios into a soup. You see the Lehman moment, and we've come back down again, way over on the right side. Where's Victor? I come back from New Hampshire. Victor's not here. What is that about? Matthew. Matthew, stay over on that chart. We're going to get Cosmo down from Hanover, New Hampshire to take over for Victor. There he is. Okay, so look on the right side of the chart. We've rolled over again a little bit of financial tension. Are we nearer to normal, Leo Tilman, or do you have concern that we're getting into not another financial crisis, but just a set of tensions?
Well, I think, first of all, the economic environment is uncertain. Policy environment is uncertain. We're in a low return environment. So when it goes to the environment in which financial institutions and customers operate, it's as tough as it goes. And there's really no end in sight. The question is, what policies do you need to put in place to stimulate the economy? And again, I get back to the same point. How will institutions respond to these pressures?
Right.